Good morning, everybody. Happy Friday. It's October 25th, 5:26 a.m. Central Time. Grain markets are lower this morning. Brian Split is here. Before we start, guys, we did a premium video yesterday regarding the Farm Act, the potential for big direct payments to corn, soybean growers, a number of other crops as well with Paul Neiffer. If you want to see that video, sign up for the premium deal today. That's my quick ad. It's the only one we're doing today. Let's get started with the soybean market.
So soybean futures closed lower yesterday following a move to fresh 2-week highs. The nearby November 24 contract traded as high as $10.12 per bushel prior to a close near $9.96. There is additional downward pressure this morning. Soybean calendar spreads also reversed to the downside on Thursday following a sharp intraday rally. The November 24 through January 25 spread traded as narrow as 2.75 cents prior to a lower close. First notice day for November 24 futures is next Thursday. Farmers holding November basis contracts will be forced to price or roll them by Wednesday at the very latest. The days preceding first notice are often associated with weakness in both flat price and spreads.
We'll start with the spreads. Brian, this looks like a blow off top. It looks like whichever commercial entity was caught on the wrong side of this finally capitulated, gave up, and now we may revert lower.
So what it looks like yesterday was, has a long tail on that bar, and I think a close on the lower side of 10 cents of carry would, to me, confirm that was a little bit of a blow off high. And really, as Mackenzie had said, traditionally we should see the spreads and the flat price back off as we get into first notice day. So another spread that you may not have the actual chart for, but the November spread, so Nov 24, Nov 25, that gapped lower last night. And so that's another sign that these spreads may have had a significant high as well as the futures.
This spread hadn't made any damn sense to me for several days. I mean, the rally, the only thing that would make sense to me is that somebody was in fact caught on the wrong side. Does that make sense to you, or is there some other reasoning for this?
Yeah, I mean, somebody was out of position in one way, shape, or form, and maybe they were short basis. Maybe they, had some of the deferred grain bought and priced, but they had some holes in the nearbys that they needed to get some product short term. And one of the things that happens with these spreads is, like, when it's over, it's over. So if that mechanism did its job, then the move that, or what caused this move, might be over, and I think this is a done deal.
I'm concerned for the soybean market over the very near term, the next 4 or 5 trading days. These periods preceding first notice day are not good in years with big crops. And we're told it's a record soybean crop. We're told we've got this hugely burdensome supply and demand situation. So a lot of farmers that may be forced to a decision here over the next 3 or 4 trading days.
USDA released weekly drought monitor data yesterday. Some areas of the Corn Belt received rainfall last week, but the majority of the region experienced below normal precipitation and above normal temperatures. Drought conditions worsened across a large portion of the area. Approximately 88% of the Corn Belt is experiencing some level of drought. That's up from 11% just 3 months ago. The High Plains received minimal rainfall and above normal temperatures last week, and of course, that caused drought conditions to worsen across the region. When we look at the percentage of U.S. areas experiencing drought, corn country 76%, soybeans 68%, winter wheat 58%, spring wheat 37%, and cattle country 59%.
Here's a chart that I threw together this morning. U.S. corn areas experiencing drought. We have jumped to 76% very quickly over the course of just like 3 weeks. We went from like the 30s to the 70s, and we've now got the most corn experiencing drought, most corn areas since 2012, which is a phenomenal shift in the situation.
It is. I mean, it happened fast. You think about how fast we went from 50 to 60% in drought to 5, and then the sharp increase. And I think a lot of people have asked, all right, well, what did the drought monitor look like in October of 2011? And I'll tell you, it didn't look anything like the way the drought monitor looks right now. If visually, I think the drought monitor looks a lot like 2022 at this time of year. The percentages don't match up, but just like where there's drought, it was really the whole country was in some sort of drought, but not severe drought. when you look back to October of 2011, which preceded the drought of 2012, there really wasn't much drought in the Midwest, nothing significant. It was just centered extreme drought in Texas. The whole state was brown and on a drought monitor map. And what eventually happened is that extreme drought in Texas moved its way into the Midwest. So it's not a similar setup currently, but yes, we have a very high number or high percentage of acres in drought conditions right now.
As far as market impact right now, as it relates to drought, you've got the river, which is expected to remain very low through the first week of November. Maybe there's some concern about winter wheat, although there's almost like no correlation between fall winter wheat ratings and the actual size of the crop. We haven't seen the ratings yet. They'll be out, I think, next week. But I know that corn and soybean growers are concerned for sure.
Yeah, there's no doubt about that. It's awfully early, and we just showed how we can go from no drought to drought, or we can go from drought to no drought rather quickly. So,
gosh, it happens fast.
Yeah, I mean, it's something I have a very hard time being concerned about as far as next spring. But I don't grow corn and beans. I don't have to deal with the dryness. Just from a market perspective, it's hard to get excited about it right now.
Yeah. All right, let's jump to export sales.
So export sales were strong once again last week. Net soybean sales were the second largest for any week in more than a year, and were also near the upper end of pre-report expectations at 79 million bushels. The print was up 26% versus the previous week and up 47% from the prior 4-week average. China was the largest soybean buyer for the week. Net corn sales were strong, surpassing pre-report expectations at 142 million bushels. The print was up 62% from the previous week and up substantially from the prior 4-week average. Mexico was the largest corn buyer for the week, and net wheat sales were reported at 20 million bushels. The print was up 6% from the previous week and up 38% from the prior 4-week average. Mexico was the largest wheat buyer for the week.
We knew that the corn sales were going to be good because there were a whole bunch of announced flash sales, but they were even better than expected. I think the trade was looking for 3.3. We got 3.6. Mexico and also unknown destinations have been really big buyers. So you've got a corn export book now that is the third best of the last 10 years. The only 2 years that were better of the last 10 years were 2020 and 2021. And those years were associated with Chinese buying, whereas this year we've been able to do it without Chinese buying.
Yeah, and maybe some of the buying recently that is unknown is China. We don't know that yet.
I've been told no, but we don't know.
Right. It is unknown. But I think even when you just see unknown show up, I think there's sort of that concern or assumption that it could be China, because a lot of the bean buying that's unknown is China. But bottom line is that we knew we were going to have some very big exports. This was a very good setup for a buy the rumor, sell the fact type of a deal. We just had corn go from $3.99 to $4.24. Right. So we rallied 25 cents into this export sales announcement. And I think we hit some good resistance on corn yesterday. So I really don't want to see corn on the other side of maybe let's call it 417 today. You've got the 20-day and the 100-day moving average. But as far as the export sales go, this is the best story for corn right now is the pace of sales we're making. And you just wonder if we're seeing some aggressive buying of our ag products in general ahead of the election. Just say, we know we need the product. We're at cheap values. Let's secure it before we find out what the results of the election are.
The total book of sales is 34% better than it was a year ago. And USDA has projected that we're only going to see like a 1% increase in corn exports this year. I have seen the argument made that Mexico is kind of doing a front-loaded program. They like the prices. Maybe they're worried about geopolitics, and they're getting out in front of this thing. And the argument is that they've only got an appetite for so much corn. You know, it's that their final program is not going to be totally different than what USDA has projected. Now, soybeans, on the other hand, I think are still kind of problematic. We're getting closer to where we need to be to hit projections. You can make the argument that it's at least possible, where like maybe a month ago you couldn't make that argument, or it was tough to make that argument.
Yeah, there's the bottom of this chart, fourth worst of the last 10 years, but then some of the recent numbers have been, the best week for this week in history. And so we're getting some kind of mixed signals of where we're at. But again, when you look at it in the big picture, we are not quite to where we need to be in order to hit USDA's goal for for soybean exports. We've closed that gap or narrowed that gap substantially, really over the last 3 months, since about mid-July. So there's been a rather tremendous amount of buying. But God, it's like, all right, so we've seen all this buying in the last 3 months, and here we are, 40 cents off of contract lows. So it hasn't accomplished a tremendous amount as far as price action for us.
Okay, so even if we hit or exceed USDA's soybean export target, you could still be left with the carryout that's 500 million bushels at the end of August, which is not necessarily friendly.
Yeah, and part of this too is how much of the buying actually gets shipped. Is there a certain amount of buying that could be potentially canceled down the road if there is a large Brazilian crop? And again, it's debatable what the Brazilian crop was their last harvest. There, some of the South American agencies have it just under 150 million tons. USDA is just above 150, but now we're talking potentially 170 million tons out of Brazil for this next crop that's coming online. And, if we're dealing with another 20 million tons of South American soybeans, or just Brazilian soybeans, not including Argentina and Paraguay and all that, but that's a lot of extra beans that could really, again, delay that buying window of China. We saw what 150 million ton crop did, delaying their buying till July this year.
Yeah, Brazilian weather has been a lot more cooperative as of late also.
We did have more flash sales yesterday. U.S. exporters sold 9 million bushels of corn to Japan for delivery during the current marketing year, and exporters also sold 6 million bushels of corn and 7 million bushels of soybeans to unknown destinations for delivery during the current marketing year.
This is good stuff. This is kind of what we've seen, Ryan, is like a lot of sales, but not a whole lot of them have been really big. Like we saw the one big corn sale in Mexico, which is actually fairly normal-ish. And then a lot of this stuff, 100,000, 200,000, that's kind of been the trend.
Yeah, right. So the Mexico purchase, they do a very large purchase every fall. They've done that every year for the last several years. And actually, this purchase is smaller than what they've done the last few years. But what I actually am happy to see Japan in here. Japan, used to be one of our best customers for corn.
Traditionally,
And
yes.
so it's good to see the Asian market come back in. And I like the fact that we're seeing, instead of just one customer, right, which has been for a while, has been Mexico, that we're seeing multiple destinations show up for exports.
The one thing that we have seen again this week is greater strength in Gulf basis, especially soybeans. CIF October barges were bid $1.45 over the NOV soybean contract yesterday. That factor, the fact that Gulf basis has been so strong, has actually rendered U.S. soybeans a lot less competitive on the export market. The fact that the cash market at the Gulf has been a lot stronger, and that's not necessarily a big positive for business moving forward.
The CEO of JP Morgan Chase worries that World War III has already begun. According to Jamie Dimon, geopolitics are a far greater concern than the economic outlook. The wars in Ukraine and the Middle East, coupled with increasing collaboration between Russia, China, North Korea, and Iran, represent a massive threat to the U.S. Dimon has said that global nuclear threats pose the greatest danger to humanity, surpassing even the risks associated with climate change. The economic consequences of a global conflict escalating beyond control would be extensive and far-reaching.
Well, that's a fun headline. I read that North Korean troops are either in Russia or are headed to Russia. That
Ukraine.
can't be good.
North Korean troops were potentially headed to, is it Russia or Ukraine? I'm trying to
fighting for Russia in Ukraine.
Correct, right? So
I guess that's the headline.
So, and I think another concern, I guess, is just Putin's got a lot of nuclear weapons, and the guy is not going to want to lose this war, and I don't think Ukraine can beat Russia on its own. So it requires a global or a large group to beat Russia. And so far it's been, military support through financing and weapons. But I don't know. What does Putin think if a certain candidate gets into the White House versus the other candidate? I don't know. And hopefully, if we're in some kind of a world war, it's not a world war like we think, like World War I, World War II, where it's purely kinetic world warfare. I think there's a lot of different ways to conduct warfare now. There's a lot of psychological warfare. There's a lot of propaganda, and so if we are in a world war already, hopefully we see things kind of stay in those dimensions and not in just absolute kinetic warfare where we're dropping bombs everywhere. That no one wants that.
Jamie Diamond says we run scenarios that would shock you. What sort of scenarios is he running? I mean, obviously nuclear type stuff, I would imagine.
Yeah, right. So I think it's just situations and what are the potential outcomes. And, they can use AI for this stuff and run a scenario a million times. And hey, X% of the time it shows this outcome and X% of the time it shows this outcome. So I've been in war, Joe. I don't wish it on anybody. It's a horrible thing. And I really would like to think that we can avoid this. And I don't want to grow up in a world where my kids have to think about this kind of stuff.
Terrifying. What did cattle do yesterday?
They moved higher. Live cattle were 32 cents to $1.67 higher. Feeders were 67 cents to 170 higher. We do have a cattle on feed report coming out here this afternoon. Cattle on feed as of October 1st are estimated at 99.7% of year-ago levels. Placements during September are expected to come in at 95.8% compared to last year. And marketings during September are forecast at 102.2% of year-ago levels.
Brian, cattle market thoughts?
Yeah, a good move yesterday. We made some new highs for the moves in both the December, February. It's kind of the two contracts I'm keeping an eye on. We're right back up to some highs that we had made, whether it was early in the year or maybe in that July timeframe, that May to July timeframe. So we're interacting with some pretty serious resistance right now. The one thing that we've noticed is that through all of these pullbacks, right, that we've seen some pretty good corrections in the cattle market. Once we get to the front month contract getting close to delivery, it always seems to work its way back up and into the 190 plus area because the cash market is staying where it is. So cash is going to have to make a large move to the downside in order for us to see a bigger picture overall break in cattle. And we just haven't seen that yet.
Mackenzie, do you have a prediction for the report today?
I would like to think it would be neutral to friendly. Wouldn't that be cool for it to be friendly finally? But
my prediction is that they'll miss the placements by 5%. As they always do.
I think that's a stretch.
Okay. Outside markets this morning, U.S. dollars flat. S&P's up 15. The Dow's up 90. Gold's down $16. Crude oil's up 43 cents. Have a great weekend, guys. Brian, thanks for joining us. We'll be back on Monday.